My name is Trent Robison, and I'm a partner with the accounting firm Buckberger, Baerg and Partners. I've been involved in tax practice for, about the past 10 years. I focus in my practice on the preparation, compliance of, and planning for Canadian small businesses. But another major facet of my practice is assisting Canadians who need to file U.S. tax returns, such as U.S. citizens or people who simply have investments in the U.S. Today, I will be speaking about some of the government's financial measures to assist individuals and businesses during the COVID-19 pandemic. And I'm doing this presentation for the benefit of the Rajmanik Mentorship Program. For most questions, if you could leave your questions in the chat and I will get to them at the end of the presentation. However, if you think that there is, I guess, something valuable that you want to add during my presentation, please feel free to turn on your mic and interrupt me, and I should be able to address the question or issue. Anyways, with the introductions completed, I'll begin on the presentation. All right, the agenda for today is to go over the federal government wage subsidy, which was announced earlier this month, but then the government has since considerably changed the qualification criteria and the amount of the subsidy since. Talk about a bit about employment insurance and how it works and some of the extra programs that may help businesses and workers during the COVID pandemic. Next, talk about some of the extended due dates for federal taxes, some credit that may be available under government programs, talk about the Canada Emergency Response Benefit, provincial supports, and namely Saskatchewan. And then I will also have time for questions at the end of my presentation. All right, so this is a pretty small slide because ultimately we don't have very much information on it. I will provide a little bit of background. Earlier this month, the federal government, as part of their initial announcement of support that they were going to be giving to businesses, announced that they would provide a 10% wage subsidy for wages paid on or after March 18th through June 20th, 2020. Many businesses had commented that this 10% wage subsidy would not be sufficient to allow businesses to continue to pay employees during the pandemic, especially if they had laid off all of their employees or the business was forced to shut down due to the pandemic. So just recently, the government, so on last Friday, the government announced that they would be increasing the wage subsidy to 75% and would provide details about the subsidy this week, or today, this week. Yesterday, Prime Minister Trudeau announced that it did provide some of the high-level requirements to be eligible for the subsidy and a few more details. But the actual regulations or the more substantive detail was going to be available today at some point. And unfortunately, that has not, at least as at just before this presentation began, the details on this wage subsidy were not announced or made public. And so unfortunately, I don't have huge amount of details on this measure. What I can say, or what has been announced, is that broadly it will be provided to employers that have a 30% revenue decline. Details in regards to the measurement of this decline were not provided, either as to the period that would be measured or exactly what would count as a revenue decline, or how is it determined, or when is it determined. All of those details were not released. One detail that was released was that the 75% wage subsidy would be retroactive back to employees paid on or after March 18th, 2020. And further, there is no requirement that businesses actually pay the 25% not covered under the wage subsidy to employees. One additional detail that was released was that the 75% of the wage subsidy will only apply on the first $58,700 worth of employment income for the individual on an annualized basis. So I believe the number was $800 and some dollars per week. Additional details hopefully will be released today, and our firm certainly plans to summarize those details, and we'll be posting on our website hopefully later today, but as late as tomorrow, depending upon how long it takes us to summarize the information. Next, employment insurance. In general, it's a government-run plan to provide continuity of earnings when an employee suffers an interruption of earnings. Employees are required to pay in, and then the employer has a 1.4 times matching obligation to the employment insurance. Furthermore, business owners generally are not subject to employment insurance on their own wages. This limitation would apply to people who own 40% or more of a business, or those who are paid in a non-arm's length basis. Once eligibility for the benefits is established, though, the benefit is normally equal to 55% of earnings up to a maximum of $54,200 on an annualized basis. And that would be 55% multiplied by 54,200 would be the maximum benefit. Regular benefits. This is the most common type of benefit, and it's applicable to those people who are terminated from their employment through no fault of their own, and are available for work and not able to find a job. So this would be very applicable for businesses that were requiring to close due to health measures under COVID-19, and are not able to compensate through working from home measures. It also, of course, would be applicable if a business was only partially able to compensate through working from home measures. There's a 7-day waiting period to claim employment insurance. The way that Service Canada refers to this is that this is kind of the deductible for the employee to claim EI benefits. So they need to have a 7-day period where they are not actually earning anything from their business, or yes. Employees are eligible for EI for a period of 14 to 45 weeks, depending on the unemployment rate of the region and the amount of insurable earnings accumulated in the past 52-week period. So the way that works is that the higher the unemployment rate in a region, the longer that a person is eligible for employment insurance. Similarly, the number of insurable hours accumulated in the past 52-week period, the longer that a person is potentially eligible for the benefits. Earnings for the purpose of the benefits are based upon the average of the employee's best weeks in the past 52 weeks. The number of weeks that you look at vary from 14 to 22, again based upon the unemployment rate in the region. If it is a higher unemployment rate, you only need to pick the best 14 weeks and average those, whereas for a low unemployment region, it would be the 22 best weeks in the past 52-week period. The maximum possible benefit from EI is $573.27 per week, but it can be lower if that earnings calculation comes up with a lower number. There is sometimes people are required to repay EI if their overall income as measured in their tax return is over about $66,000, and they're in receipt of EI and they've claimed EI at least once in the prior 10 years, then their income in excess of $66,000 will need to be repaid, and this is done on the individual's tax return. The next kind of benefit that I think might be quite applicable now is the sickness benefit, and this benefit is applicable is for if an employee cannot work for medical reasons. Medical reasons do include the need for quarantine or self-isolation. The benefits are calculated in the same manner as regular benefits, with the exception that the maximum period of benefit is 15 weeks. After the sickness benefit period has applied, an individual that is then potentially eligible for the regular benefits if there is no job to return to. Due to the COVID pandemic, the government has waived the 1-week waiting period for the sickness benefit. And in order to access this waiver, there is a special phone line that is dedicated to this purpose, where an agent is able to override the standard 1-week waiting period. In the past, in order to get the sickness benefit, there was a need for a medical certificate, and Service Canada has generally waived this requirement. However, Service Canada, of course, still has the ability to request one if they deem the circumstances require it. At this time, a person is required to quarantine or self-isolate, in which case they would be eligible for this benefit if they test positive for COVID-19, have close contact with a person who is positive for COVID-19, or have returned from international travel. Next is the EI work sharing benefit. Also, under these two previous benefits, if an employer paid an employee wages while the employee was in receipt of these benefits, those wages would reduce the EI entitlement dollar for dollar. This work sharing program allows employers to get around to mitigate this restriction. When members of a work sharing unit agree to reduce their hours of work by the same percentage and share available work, then the employees would be able to go onto EI and would be eligible for full benefits calculated under the normal method. So basically 55% salary up to that maximum based upon a $54,000 salary. But all the key requirements is that each employee who is in a unit subject to this work sharing must reduce their work by at least 10% to a maximum of 60%. I believe that that there can be some clawbacks when a person would be having income going above the 100% of their pre-work sharing income. So in other words, it's not possible for an employee to be better off by going under the work sharing plan than if they had just been working 100%. And I believe the limitation is 95%. The length of the work sharing agreement is a minimum of 6 weeks and can last up to 26 weeks, but extensions are available up to 76 weeks. Employers are requested to submit their applications 10 calendar days before the requested start date. So if an employer needs to use this, I strongly recommend that they get in an application as soon as possible. Again, employees will automatically be subject to a clawback of 30% of their income, total income for the entire year over $66,000. One thing that I do want to indicate though is that there is rather substantive reporting obligations to Service Canada on a very regular basis. And so a business that has no ability to handle an administrative burden may have some difficulties with implementing this work sharing program. All right, the next program is supplemental unemployment benefit plans. These allow an employee to receive top-ups of their employment insurance earnings from their employer up to 95% of their normal earnings. And the contrast between the sub-plans and the work sharing plans is that under the sub-plans, the employee isn't actually working for the employer at all anymore, whereas under the work sharing plans, the employee is working for the employer. Similar to the work sharing plans, these plans must be registered with Service Canada before benefits can be paid under it. However, from information I'm aware of, it seems to be quite a bit easier to administer these sub plans as opposed to the work sharing plans. It requires less reporting from the employer. Next, we're going into CRA extensions of time. So the CRA has slowly been announcing various extensions to various different deadlines under the Income Tax Act. The most basic one is that the filing date for individuals is extended to June 1st. Self-employed individuals all normally have a filing due date of June 15th, and that currently remains unchanged. However, payment of taxes owing will be extended to September 1st, 2020. Trusts and partnerships is extended to, with a fiscal year ending on December 31st, 2019, is extended to May 1st. Other trusts with the deadline falling after March 18th are extended to June 1st. Again, payment of taxes owing is extended to September 1st, 2020. Charities have a much further extended due date. If their annual return was required to be filed after March 18th, then their deadline will be extended to December 31st, 2020. In addition, most other administrative filing deadlines under the Income Tax Act that would otherwise come due after March 18th have been extended to June 1st. This would include elections, any election forms, such as like a T2057, T1135, reporting foreign assets owned by an individual. However, yes, the one item that has not been extended is the 18-month deadline to file SR&ED returns, and that is because CRA actually does not have the authority to extend that deadline under the Income Tax Act. GST that would otherwise become owing between March 18th and June 30th is extended to June 30th, 2020. However, this does not extend the filing deadline for GST returns. So if you do have a GST return due, you would be required to file the GST return, and if you chose not to pay it, then they wouldn't assess any interest costs for failure to pay the GST return. However, if you both failed to file and failed to pay until June 30th, presumably CRA would assess the late filing penalty but would not assess any interest. Payroll deductions and remittances have not been extended in any way at this time. The only concession that exists is the wage subsidy. Under the earlier program, employers were able to get the benefit of the wage subsidy by reducing the amount of employer remittances without an actual corresponding reduction of the amounts withheld at source from the employee. So in other words, the employers were able to pocket some of the payroll deductions. Presumably under that, under the 75% subsidy, there will be a mechanism to actually get a refund in a more timely fashion, but that detail again has not been released at this time. The next topic is additional credit facilities. The Government of Canada has, and the Bank of Canada have are trying to provide an enormous amount of liquidity to the financial system, and has created very substantial loan programs to businesses to assist during the COVID-19 pandemic. Notably, so far they've allocated I believe so far an extra $10 billion to BDC and Export Development Canada to provide loans to businesses. It is a little bit unclear with the speed of these changes, whether or not the new measures that were announced on Friday are in addition to the earlier measures announced earlier, or are simply supplemental to, or instead of. But for larger businesses, the government will guarantee loans provided by financial institutions up to $6.25 million, of which $5 million is guaranteed. It's expected that these loans will have commercial terms applied to them. Similarly, the federal government has capitalized Farm Credit Canada with an additional $5 million in lending capacity. The much more significant announcement to many small businesses within the country is the Canada Emergency Business Account, which is a brand new loan program where effectively the government will fund one of the Canadian financial institutions up to $40,000, and in order to make a highly subsidized loan to those businesses. There was not a substantial amount of information provided by the government in their initial releases. However, subsequent to the releases, at least one bank has provided at least a few more details in regards to eligibility and the details of the plan. Specifically, the criteria that I am quoted from is actually Scotiabank. So the maximum amount of the loan is $40,000, and it looks like it will be administered as a line of credit as opposed to I guess a term loan, where so I presume that the business owner will be able to draw upon the line of credit as required. But this loan has very special terms in that there are no minimum monthly payments on the loan until December 31st of 2022. There will be no interest and the interest rate on the loan will be 0 until December 31st, 2022. And if the loan is paid off prior to December 31st, 2022, the government the financial institution will forgive $10,000 of the loan. Now, so for businesses that qualify, and are able to repay the loan, it basically would be a free $10,000. Eligibility for the loan is that the organization is an operating business, in other words, not a holding company, in operation March 1st of 2020. I only received this criteria last night, and I haven't had the opportunity to clarify what exactly an operating business is. It might just be that is the rule, and businesses are required to self-certify to this rule, and it will be adjudicated at a later time. But it is hard to say. The major substantive requirement to accessing this measure is that the organization's payroll expense during the 2019 calendar year must be between $50,000 and $1 million. The business agrees to use the funds to pay for operating costs that cannot be deferred, such as payroll, rent, property taxes, and other similar expenses. the business must have an active business operating account with the financial institution. In Scotiabank's case, it was as at March 1st of 2020. And this loan can only be applied for from a single financial institution. And there was a reference to a potential penalty should a business try to apply for this loan with more than one financial institution. Next is the Canada Emergency Response Benefit. This benefit pays $2,000 every 4 weeks to an individual that qualifies for the benefit. I think the key is that this benefit is an all or nothing benefit. It's either $2,000 every 4 weeks or nothing. And there are no clawbacks, so if your income earned throughout the other portions of the year was $500,000, it's irrelevant, you still could qualify. One requirement is that the individual must have earned at least $5,000 from employment, self-employment, or EI or paternal benefits in 2019, or in the 12 months prior to applying for the benefit. Okay. The eligibility is determined with 2 periods. The first is the individual selects any 4-week period that they like, over which the benefit is paid in respect of. This 4-week period must start on a Sunday, and the first 4-week period that can be selected is Sunday, March 15th, 2020, and the 4-week period must end on October 3rd, 2020. Within the 4-week benefit period, in order to be eligible, the individual must be able to identify 14 consecutive days during which employment or self-employment has ceased, and the individual was not earning any employment, self-employment, or employment insurance income with respect to those 14 days. Next I'll talk about a couple of examples to just clarify the application of these rules. The first example is an individual who was self-employed and was required to completely shut down their business on March 27, 2020. Assuming that they had earned $5,000 in self-employment income in 2019, they should be eligible for the benefit for the period of March 15th to April 11th, because the individual has 14 consecutive days during the period. So they were working up to March 27th, but then because their business shut down on the 27th, they're no longer working on any day after the 27th. And when you count the number of days from March 28th through April, 10th, that would be a 14-day consecutive period during the period March 15th through April 11th that they have ceased working. And this individual would be eligible would continue to be eligible for this benefit every 4-week period as long as their business remains shut down. So the thing that I'm trying to emphasize in this example is that the individual qualifies for the entire 4-week period, even though they were working actually a very substantial portion of it. They were working March 15th through March 27th, but yet they do qualify for the whole period. The second example deals with a situation that is a business owns a corporation and is remunerated by the corporation in the form of dividends. An individual who owns 100% of the shares of a corporation operates a business in Canada. Their business is required to shut down on March 20th, and the individual is no longer working in that business. The individual's only source of income historically was from dividends paid to the individual from the company. So in other words, this person, instead of remunerating themselves by paying themselves a salary, remunerates themselves by paying themselves a dividend out of their company. If they paid themselves a wage of $5,000 on March 20th, 2020, and then submitted the payroll withholdings in respect of that wage on April 15th, then they should be eligible for this Canada Emergency Response Benefit. So I wanted to clarify something in regards to the timing of the $5,000. The legislation very specifically says that this $5,000 needs to be paid, only needs to be paid prior to the person applying for the benefit. So the person could actually receive the wage after their eligibility period. So in the context of this example, if the person paid themselves a wage on April 11th and then applied on the 12th, this benefit would also be, this benefit should also be payable. Some areas where I have seen difficulties in getting this benefit, or this benefit seems not to be working quite as intended, would be in a situation of a dental office or optometric office or physiotherapy, or those type of service-based businesses that at least in Saskatchewan were required to close in the week of March 20th in order to prevent the spread of COVID-19. Those businesses were just required to close normal operations. However, they were permitted to continue to see emergency patients. And the problem with seeing emergency patients is that they would no longer be considered to have ceased working, which, according to the wording of the legislation, could disqualify them from receiving the benefit unless they could identify a 14-day period during which their activity really had ceased. One thing I have heard that some dental offices do is that they rotate this responsibility between all the different dentists in the office. So to ensure that each practitioner has 14 days, 14 consecutive days that they haven't seen any patients. So this benefit, again, will be helpful in situations where people are unable to work due to because of COVID. And that is another further requirement, is that the unemployment or the cease of work must be related to COVID, but there is no, that is an undefined term, and the wording appears to be rather broad. Next, I'm moving on to some provincial measures. So the government put through new legislation that allows regulations that allows employers to impose a temporary layoff during a public health emergency without it being considered a severance of employment, meaning that an employer would not be required to pay severance, nor would they be required to pay out the vacation pay before ceasing pay. This would allow employees to get onto EI in a much speedier fashion, and also reduce the financial obligations of shutting down the business on a temporary fashion. However, in order for this temporary layoff to be counted as a temporary layoff, the employees must be employed again within 12 weeks. Secondly, the government created a new category of unpaid leave, which allows employees to self-isolate as a part of the public health emergency, either as an order from their employer, from a government official, or through advice distributed from the media. Generally, that would apply if someone in their family had COVID-19, they were returning from international travel, or some other situation. The government has said that while they are maintaining the deadline for filing PST returns, they said that they will accept requests from businesses that need additional time, as long as that request for late filing is made. In addition, the government has the late payment of PST will not be penalized for 3 months during this public health emergency. So the government won't impose interest or penalties for failure to pay PST. All Crown utility companies, so natural gas, electricity, will implement, and I guess SaskTel as well, will implement a zero interest bill deferral for 6 months for customers whose ability to make bill payments may be impacted by COVID-19. And I believe that most of these utilities, just across the board, are not charging interest or late fees and aren't requiring individuals to actually demonstrate, but I'm not confident on that. Finally, the provincial government has, I guess, a stopgap measure for the Canada Emergency Response Benefit of where they will pay a benefit of $450 per week for up to 2 weeks for those who are required to self-isolate and have a disruption to their earnings that isn't otherwise covered. Okay. And so that takes me to the end of my prepared material. I am going to flip it over to see any questions. The first question is can employees apply for EI if they are on layoff? And so the answer to that question is generally yes, assuming the layoff means that they are unpaid by the employer. The employee would be eligible to apply for EI and would be subject to the 1 week waiting period. So the question in regards to how about the requirement to isolate because of a suppressed immune system, unfortunately, and I believe that this question is probably relating to the entitlement for sickness benefits under EI, and unfortunately, I don't believe people in this situation technically qualify for sickness benefits. Technically qualify for sickness benefits under the EI provision. I recognize that seems like an unfortunate consequence, but that just is the case. However, if the employer subsequently does lay off the employee, they would be able to qualify under the general unemployment insurance. The one thing that employee might be able to do instead of qualifying for EI, though, is to apply for the Canada Emergency Response Benefit as a person required to self-isolate because of a suppressed immune system should meet the criteria for eligibility for that benefit, and that benefit works out to $500 a week, which is only a little bit smaller than the absolute maximum benefit under EI. In fact, many people would be better off applying for the Canada Emergency Response Benefit than they would be applying for EI. And I believe that the federal government is planning on optimizing workers between them, but that has not been stated explicitly at this part. Is there any word on whether, so the next question is there any word whether credit unions are included as eligible financial institutions? I haven't heard about this, but if I were to guess, I would say that they likely would be eligible financial institutions. The idea is to get this this funding out to as many businesses as possible. If the federal government had the people in place to be able to give the loans directly, I'm sure they would. They just don't have the departments properly staffed up to be able to do this. So instead, they are using the staffing of all the various financial institutions to deliver this program. So I would expect the answer is yes, but I don't know the answer for sure. If you've paid out severance and then bring back the employees within 12 weeks, how is that handled? Well, if you paid out the severance, then effectively that would likely be treated as a complete termination of employment of the employee, and then you are just rehiring them 12 weeks later. I don't believe there would be any ability to require the employees to repay those wages. However, having said that, if the business qualifies for the 75% wage subsidy, then as long as that severance was actually paid after March 18th, then the business could get that money back. Yes, so the severance should be covered by the 75%. Or I have to be a little bit careful because that it certainly would have been covered under the 10%. It certainly would be covered under the 10% period, under the 10% original wage subsidy, but they're completely rejigging the program. So I have to be a little bit careful that severance would be covered. But under the old terms of the programs, it likely would be. And I would imagine that for policy reasons, the government would want to go through with that. So then the follow-up question was, so we would need to wait the length of time of the severance before bringing the employees back. Um, not, not, so there would be multiple ways of handling that. One is that you could basically treat the employees as if they basically hadn't been terminated and just call it, yeah, we gave you a leave with pay, and then collect the 75%. You basically transform the severance back into just kind of a leave with pay, cover, and then claim the 75% wage subsidy on that. Or you could bring them back immediately after and truly just call this a reemployment. But there would be no requirement to bring back. There'd be no requirement to wait 12 weeks before bringing back the employees. Okay, so Betty F. Question: self-employed but not paying self as a business in growth stage, not paying $5,000 in payroll, so no coverage other than the provincial. So so as a self-employed business person, it isn't really relevant whether or not the self-employed person is actually paying themselves. It's relevant whether or not they had self-employment income. So if they were making money, regardless of whether or not they took out the money, then they could potentially qualify for the CERB. If and not paying $50,000 in payroll, is there no coverage other than the provincial? It might be challenging. There might not be coverage in that situation under any of the plans in the hypothetical that you list. So that is the end of the questions that are in the chat. Does anyone else have any further questions or comments that you would like me to answer?
If that's everything for everyone, feel free to unmute yourself. We're getting lots of thanks. Lots of thanks for Trent. I agree. Thank you, Trent, for preparing this talk for us and breaking down all of these announcements that are out there for us. It's very, very valuable information. As we can see, there's a lot of options and details depending on various circumstances. So we very much appreciate your time and expertise. And your and Buckberger Baerg's continued support of the program in all forms. I know you were a sponsor for our fundraising banquet. You continue to support us and our proteges through these information sessions as well. You mentioned that there's some updates coming later today. We'll keep an eye on Buckberger Baerg's website and provide a link to that for everyone through the program's social media accounts. Again, thank you to everyone for joining us. Our next webinar will be on Thursday at 11 a.m. Central Standard Time. It is going to be COVID-19 employee benefits, what employers need to know today and planning ahead, presented by Andrea Hansen of Sutton Benefits and Pension. So again, we look forward to having you join us on Thursday, and please feel free to invite others as well. This is a free seminar, just as the rest of ours are. Further details can be found shortly on the Rajmanik Mentorship website under events or in the calendar. You can also share details from our Facebook page, Instagram, and Twitter. But that is everything for today, unless there's any more questions. Sona, I was a bit late. Will the video be available? Yes, we will make this available on our website. Again, for anybody who is interested, I'll post a link to that through social media, but we will have a link available with all past seminars through the website, and that will have videos and slides. As long as Trent, you're okay with that? we can talk about that afterwards. Can you please share the slides and the last slide of the links to the websites? Can you please?
Oh, I did just uploaded the slides onto the presentation, but I certainly would be happy to send this slide deck to the organizers here so that they would later be able to share that publicly.
Fantastic. Thank you, Trent. Really appreciate that. So anybody who's looking for that deck right now, it's available through the chat. I won't close the chat or the room right away, but please do grab that presentation right now. Otherwise, the presentation and the audio, as long as Trent is okay, will be available on our website shortly. Yeah, any other questions? Otherwise, thank you everyone again. Thank you, Trent. So much valuable information. It's very confusing for all of us out there. And so you really broke that down very nicely for all of us. Thank you again.
All right then. Thank you very much.
All right.
Have a good day.
Everyone.
Bye-bye.